Hello, everyone. This is Jordan. Welcome back to the Daily Gold YouTube channel. And for those who are new, welcome to the Daily Gold YouTube channel. Thank you so much for joining me on this late Monday evening, May 27th, 2025. But when you see this video, it's going to be May 28th. I want to talk about silver. It seems like there's always hype around silver, but some things have been happening in recent weeks. And we need to pay attention because silver could be closer and closer to outperforming gold than I thought. So I'm going to talk about that. Also, a little bit about the silver stocks as well. Let's get to the video. Okay, so first we need to understand, when does silver typically outperform gold? So here we have silver divided by gold. This is the ratio. So when this is rising, that means silver is outperforming. Here's silver. Here is gold. This is a weekly chart, by the way. So this moving average here for gold is the equivalent of the 200-day moving average. Now, a month or so ago, I posted this chart in a video or two, and I was talking about how this is the 7th historical breakout in gold. What happens is gold makes a breakout, you get a big move higher, then gold corrects, usually the 200-day moving average. Then it's around that time or a couple months after that silver begins to outperform gold. Now, the other thing that I should mention that usually comes with that is also silver makes its own breakout. So here are some examples of that. We go back to the early 70s. This is the breakout in gold here. After we left the gold standard, 1972, big move higher. Then you had this little pullback here. And here is silver just a little bit after gold tests the 200-day or comes really close to, you have silver breaking out, and then silver outperforms for a little while here. Here's the second breakout here. Well, for gold, I should say. So it's here, gold quickly came back, retested the 200-day, and here's silver breaking out. I mean, depending on how you measure the breakout, there's a breakout here and then a breakout here. But you look at silver divided by gold, that was the point when silver started to outperform gold. Then you have this breakout where gold broke above 300 in the end of 2002. In early 2003, it comes back, retests the breakout, tests the 200-day moving average. And what do you know? Right around that time, silver makes its own breakout here. Silver divided by gold moves up, pulls back a little bit, shoots higher. I mean, you get the gist of it. But of course, that doesn't mean we're going to see something exactly the same in this case. Here's gold here and now. This is a weekly chart. So gold corrected 11%. Now it's less likely, I think, that we're going to see gold come back and test the 200-day moving average, except in the short term. Now I will be wrong if gold consolidates bullishly for, let's say 2, 3, 4 months, and the moving average catches up, then it would test the 200-day, and then that analysis is still in place. But the other point of the analysis is silver has to make its own breakout. A silver breakout comes along with silver outperforming gold. And last year, gold broke out here, silver broke out here above 26. But gold was in blue sky territory. Silver still had all this resistance to deal with here up to 35. It is still dealing with 35. But the larger point is the breakout for silver, when it's going to start outperforming gold again, that's 35. So it's silver taking out 35. And, before we kind of get into the short-term analysis, here's the big picture analysis. This is a quarterly chart for silver. So every candle is a quarter's worth of action. And this close right here is the all-time quarterly high. So the all-time quarterly highest close is about 37.5 for silver. It's even higher than this in 1980, the 1980 quarterly peak. And the last quarter, so the close at the end of March, that was above the 1980 high. Now this resistance here around 35, if at the end of June we see silver close at 36, that's the end of the quarter, that would be the second highest quarterly close ever. So this is another way of looking at how significant 35 is. But let's look at the monthly chart. Now, there's no candles here These are just lines. So the data here is just the close of every month. This is about 35.60 here. And we can see here, there's support here, resistance. And, we're getting pretty close to it now. So again, a monthly close above 35, the only resistance that you're going to have left, or call it 36, so it'll take out this. The only resistance you're going to have left is this little bit right here. So breaking above 35, again, that's going to be the point when silver is likely to outperform gold, or at least start outperforming gold, or maybe after it breaks 35, maybe a month or two after that, silver will start outperforming gold. Now, let's talk about the short term. Because, yes, silver has not broken above 35 yet, but it appears to be in a bullish consolidation now, with this level as support, this level here as resistance. But let's just go back here to that COVID pop. And then you had this peak here. But look at how the market has acted, or let's look at its progression if we go back 5 years. This is resistance, this is resistance, this is resistance. So 3 failures here. Fourth, it tested again on the initial gold breakout last year. So the 4th failure. Pulls back, then it gets above it. Now it's still fighting with it for a little while, but it rallies up to 35. And at that point, that tells you this should be support. So it came back here, tested it again, rallied back up to nearly 35. Now it does it again with the stock market crash. And so basically, now that you have this support here, here, and here, this is basically 3 successful tests of this 28 to 29 level. So you had a successful test here, big pop back up here. Now it's consolidating. As long as it holds here, and this is the 200-day, as long as it holds here, this is probably going to test 35 again. The analysis is silver is, at this point, more likely than not, is going to test 35 again. That's 1, 2, 3. A third test after these successful holds here of support. That's telling me that we're likely to see silver breaking above 35. Now, 35 also lines up with some resistance for silver in real terms. What do I mean? Well, this is silver against the 60/40 portfolio. This is the ETF, BIGPX. It aligns really, really closely with my 60/40 data, so I like using this for daily and weekly charts. And this is a weekly chart. So this is a weekly bar chart here. Same thing for silver against the S&P 500. And what do we see here? There's obviously this huge 11-year base, but there's also this mini base here, which is 4.5 years. And so silver the ratio has been testing this quite a few times. Here, bounce from support again. So what happens if silver breaks above here and moves up to here? That's probably going to align with silver breaking above $35 an ounce. Same thing with here, silver against the stock market. This is a 4-year base. Look at all these tests. I should have put in the moving average here. I apologize, but this is a bounce off the 200-day or the 200-day equivalent right here. Again, in real terms, you look at the price action here, you look at these charts, they're just telling you the odds favor a breakout and a move higher, like this, like this. And again, that is going to coincide with silver breaking above 35. And here's the last thing, people. If we look at the stocks, some of the silver stocks have already broken out to new highs. It's an important thing to keep in mind. And if we look at the major ETFs, SIL, SILJ here, here's SILJ here at the top, SIL at the bottom. We're looking at this price action. Here's SILJ held above the 400-day here, 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 and recently it's holding the 200-day here. So this, to me, looks like this is probably going to pop up to this major resistance at 14. But aside from this resistance here at 14, this to me looks like a bullish consolidation. You have 10 here, 13, a strong move here. If it gets above 14, measured upside target 16, it's back at these highs. Looking at SIL here, this looks to be a bullish consolidation. This is a unconventional inverse head and shoulders continuation pattern here. And then here you have the mini stock market crash pops back up. This is a bull flag. I mean, this is a bull flag. You have this sharp move, you have this bullish consolidation, bull flag, bull flag. And so that projects to a move like that, a move like that. This one, depending on how you measure it, again, this is unconventional or complex. That's a better word. Complex continuation head and shoulders pattern. This could project to 51, but basically this is probably going to take you back to these highs. So the point being, in the conclusion here, I'm not saying silver is going to break out and clear 35 next week or next month, or even in the next 2 or 3 months. But the point is, I was looking for more weakness, more of a correction in gold and silver. But looking at the recent price action, the way things are setting up, the risks are rising that you could see silver break 35 sooner rather than later. And it's the same thing with the stocks here I mentioned. A few stocks have already made new all-time highs. That's bullish. And looking at SIL and SILJ, this is bullish price action. The technicals are telling us that we're likely to see higher prices, not lower prices. And I actually hope I'm wrong, because I wish the market would rest for at least a couple of months here and give more people a chance to accumulate, give people a chance to get into the better stocks. But that's not the way it's looking. We need to pay attention to silver, because sooner rather than later, it's going to start to move and take off. That's it for Macro Mondays. Let me know what you think. Hope you had a great Memorial Day weekend. I hope you have a great week ahead, and let me know what you think of the video. Thank you.